Hey everyone, welcome back to Corporate Decoder. We're about to unpack a filing that's a bit like finding a hidden room in a familiar house. It might not change the whole building, but it definitely adds a significant new space. Before we dive in, if you love getting the real story behind corporate filings, smash that subscribe button. And for more real-time insights and to chat with fellow finance enthusiasts, join our Discord community. Link is in the description below. Alright, today we're looking at Tonix Pharmaceuticals Holding Corp, or TNXP as you might see it traded. Now, this isn't a massive overhaul of their entire business, but it is a crucial adjustment to how they're funding their operations, specifically how much money they can raise from selling their stock. Think of it as them getting approval to expand their lemonade stand's potential customer base and daily sales capacity. So, what exactly happened on the 21st of November 2025? Well, Tonix Pharmaceuticals Holding Corp made a change to a deal they already had in place with a company called AGP Alliance Global Partners. This deal, called a sales agreement, which was originally signed back in June of 2025, is basically a way for Tonix to sell its shares. Those little pieces of ownership in the company to raise money. What they did was amend or change this agreement. The big news here is that they've significantly increased the total amount of money they're allowed to raise by selling their shares. Previously, this agreement allowed them to sell up to $150 million worth of stock. Now, after this amendment, they can sell up to a whopping $400 million worth of stock. That is an increase of $250 million. Imagine you are selling tickets to a concert and you suddenly get the go ahead to sell $400 million worth instead of $150 million. That's a huge boost in potential funding. This move isn't just about the paperwork, it has real business implications. For a company developing pharmaceuticals like Tonix, cash is king or perhaps queen. In this case, funding research, clinical trials, manufacturing, and all the other costs associated with bringing a new drug to market requires a massive amount of capital. By increasing the amount they can raise through selling shares, Tonix is giving itself a much larger financial runway. This could mean they can accelerate their research programs, push forward more promising drug candidates, or even acquire other companies or technologies that complement their own. Now, it is not just Tonix saying we can raise more money. They've also included legal opinions from their lawyers, Brownstein Hyatt Farber Schreck LLP. These are important because they confirm that the shares they plan to issue are legally sound and can indeed be sold under the terms they've agreed to. It adds a layer of legitimacy and confidence to this capital raising expansion. Let's think about what this means for Tonix shareholders and for the company's future. On one hand, it's a positive sign. It shows the company is proactively securing funding to fuel its growth and development, particularly in the highly competitive and capital-intensive pharmaceutical industry. It suggests they have confidence in their pipeline and their ability to utilize this increased capital effectively. Think of it like a student being given a larger scholarship to pursue their advanced degrees. But, and this is a big but, it also means more shares will be issued. When a company issues more shares, it can lead to dilution. Dilution happens when the percentage of ownership that existing shareholders have decreases, because there are now more shares in total. So, while the company's overall value might increase with new funding, each individual share might represent a smaller slice of that pie unless the company's value and profitability grow even faster than the number of shares outstanding. It is like having a pizza shared among more friends. Each friend gets a smaller slice, even if the pizza itself is bigger. Shareholders will be watching closely to see if the company can generate enough value from this new capital to offset the potential dilution and ultimately increase the value per share. In my opinion, this filing shows Tonix Pharmaceuticals is taking a bold step to ensure it has the financial ammunition to pursue its ambitious goals in drug development. The significant increase in their sales agreement is a clear signal that they're planning for substantial growth and investment. The key challenge for them now and for investors to watch will be the execution. Can they effectively deploy this $400 million to achieve significant milestones in their research and development, leading to new therapies and ultimately profitability? The risk here is that increased funding doesn't automatically translate to success in the pharma world, where drug development is fraught with setbacks. However, the opportunity lies in the potential for breakthrough treatments and substantial returns if Tonix can successfully navigate the complex path from the lab to the market. It is a calculated gamble, fueled by increased financial capacity. Alright, that is our breakdown of Tonix Pharmaceuticals Holding Corp. Slater's filing, what is your take on this capital raising move and what it signals for the company's future? Do you think it is a smart expansion or a sign of potential dilution issues? Drop your thoughts in the comments below. If this analysis helped you understand what is going on behind the corporate jargon, please hit that like button. And if you want more dives like this, make sure you are subscribed. Don't forget to join our Discord for more discussions. Thanks for watching, and we'll see you in the next video.